Renewables. So you guys both have, to my mind, pretty interesting views on renewables. You are both, Doug, you're investing in them in a pretty interesting way, which is, you've told me, different from what you thought you would have been doing at this point. Jeff, you have been involved in this whole discussion of renewables for a long time, and I think have observed quite a shift among some of your clients. Jeff, why don't you start? Tell us, we have people in this audience who, some of them will tell us that renewables are a charade, and they are a money loser, and we have people in this audience who will tell us that renewables have a viable possibility of supplying all the world's electricity and can be profitable. You're smiling at both ends.
Yeah, because I'm a guy who lives in a market-driven world, and that's what makes markets. It's a wonderful thing.
And where are you in that market?
Right in the middle.
Okay, what does that mean? What does that mean?
I think
that's why you're smiling.
Right. We are renewables are here to stay. Having said that, they make up. There's roughly 200 gigawatts. 100 of it's hydro, 75 of it's wind, and 25 of it's solar. In a world of 1,000 gigs, where the incremental to all of our.
So let's just define terms here. A gigawatt, broadly speaking,
1,000 megawatts,
right? Which is one nuclear power plant, or 1 to 2 coal-fired power plants.
2/3 of a nuclear power plant. Yeah,
depending on site. Right. Go ahead.
And the question always has been, without subsidies, does the left half of your premise, are they economic? And I think technology, scale, and low-cost financing has put those in a much more competitive perspective than they were even 3 years ago, but certainly 10. And that will get better and better. I'm not a big believer that technology is at parity yet, but for 1 or 2 spots. Parity
with the price of conventionally produced power.
Correct.
Yeah, go ahead.
Fully loaded for intermittency and everything else, but they're getting closer. And that technology, I have no doubt. I think solar will actually overtake wind over time. I think it's more ubiquitous. It's got better characteristics. And then, of course, the piece that was mentioned last night is if we get storage, that part of the supply sector will grow even more dramatically.
And in 10 seconds, where are we on storage? Are we getting there, or we're still totally out of the money?
A lot of running and spinning, and my guess is commercial broad application is still a long ways away.
Okay, so Doug, talk very quickly about sort of your 30,000-foot view of renewables, but talk for 60 or 90 seconds about where you're putting.
Yeah, my job is to make money on behalf of our investors, largely pension plans. We're not here to drive policy. So when California utilities are offering up contracts, 25-year contracts for wind and solar, maybe they were 15 cents a few years ago, maybe they're a little under 10 cents, but many multiples what a fossil plant is, all day long. I'll take that contract and I'll build things to suit to get that locked-in stable cash flow, number one. Number two, the residential market. The subsidies are enormous. You and I have talked about this. The subsidies are understated. The 30% investment tax credit is actually not the biggest part of the subsidy. When you add in the 5 years accelerated depreciation, you add in the interest shield, there's something called a stepped up in basis. Generally, we're around 100% of the cost of a solar system is recaptured through tax benefits. I don't care if it's solar. If you tell me the government's going to give me 100% of my investment cost back, it could be that chair. We'll go ahead. So, that's a big part of it, all right? And so there's a lot of growth in the residential solar. There's some flawed players that have flawed capital structures, flawed access to the capital markets. I think that can be done better. So that's an area that we're working on. Wind, a little contrarian view. We're buying wind mainly in California that is coming off contract. There's really not a lot of buyers for things coming off contract. Merchant wind, most buyers want long-term locked-in cash flows. Why would I do that? California has a 50% renewable portfolio standard. They're not going to get there by shutting down the existing stuff. They're going to have to recontract with the existing stuff, so I think we'll benefit.
Okay, so John's standing up, and we're going to go to